Hey folks, welcome to Pro Trader Strategies. My name's Eric Wilkinson, and this is Spotting the Trade. I'm trying to get you what you need to know before you go, and that starts off with some economic data, geopolitical environment, how that impacts the overall markets with some market analysis, and then finally wrapping it up with some option strategies we can implement into our portfolios based on those assumptions. And we aren't just picking a call for a bullish assumption or a put for, or buying a put for a bearish assumption. We look at the internals there and then decide it, and I try and streamline that process for you in the videos that I do on Thursday. So please check those out. That's what you need to do, is subscribe there, folks. Hit the subscribe button, and if you want to catch these videos when I come in unannounced, hit the little bell right next to the subscribe button, because that tells you when folks come in unannounced, like I do for spotting the trades. So the bell is key for that. And hit the like button for me there before you go, because that sends the bots out there to share this information with somebody it thinks looks like you. All right. So without further ado, let's get on with the economic data across the pond. We've been talking about, well, the geopolitical environment more than anything over there. We're talking about China sitting on the border of Taiwan, waiting to see how the world reacts to the Russian-Ukraine invasion there. I think that if it goes off pretty swimmingly, we might see China start to push the envelope there over in Taiwan. Now, folks here in Arizona make the joke of they're building the Taiwan semiconductor plant out here. It's a $12 billion plant. I think Intel's building another one that's actually more expensive than the Taiwan, but I guess it's not as expansive there. But with that said, we're trying to build chips here because of the chip shortage. We know about that, and the geopolitical environments that are going on around the globe that cause these shortages. And they're trying to build this plant. Well, they want the first chip to fall before China invades Taiwan. Well, that's 2025. So I don't know if that's going to happen or be that delayed, to be quite honest. And then we also saw some purchasing managers index yesterday. We finally ended up getting those crude oil inventories, another drawdown more than expected, not quite as big a drawdown as what we saw last time, which was about 5 million barrels over expected. This only came in about 500,000 barrels over expected on the drawdown there. So not really a major push to the upside. That's basically why we were seeing a little bit of a correction here yesterday in crude oil. Expected demand going forward is still there. The rest of the week, we've got consumer price index, the CPI, core CPI, that's going to give us inflationary gauge, unemployment claims. It's going to be weekly there. So keep your eyes out for that. We just got the jobs number. So I don't think that JOLTS is going to do anything to really, or weekly job claims are going to do anything to that number there or make a major reversal. It's mostly going to be watching the geopolitical environment we've got going on here with Russia invading Ukraine and China on the border of Taiwan is making folks a little bit nervous. But looking at the charts here, we got crude oil making that bit of a pullback here. It's going to be really messy for the next couple of weeks, folks. I think that we're going to continue to see these sector rotations that I've talked about from some of the high flyer tech stocks that really did well during the pandemic and coming out of that. Those folks are going to start seeing some negative pressure as people are selling that for profit and looking to buy something that's been beat up a little bit more, obviously. So that's the idea here, is we're seeing these rotations out of the tech sector into the blue chips. Something else to note is, I'll just throw this up here because I'm getting ready to talk about it. Amazon is talking about a reverse split. Now, we've heard of splits before. That's usually when you take your stock and you cut it in half, and everybody who owned 100 shares now owns 50. The reverse split with Amazon here is everybody who owns 100 shares will now have, I think it's 20 for 1 split. Sorry, here it is right there on the line there. They announced that the 20 for 1 split. So basically $2,000 stock is going to be about $100 stock. Okay, so that means they are taking some of the stock out of the system or adding stock to the system with the reverse split, where as a split, they're taking stock out of the system. They're cutting their stock in half. They're adding more stock to it, and kind of that liquidity in the market reduces the value of the stock by that amount. So 20 to 1, reverse this down by 20. All right. So that's going to be about 100 and $5 stock or something like that, we'll call it. So now it makes it more affordable. Another thing that this does is it kind of opens the door for them to get into some of these other indices, like the Dow is something I think that they're probably eyeing up there. So keep your eyes out for that. I think you might see a bit of a push to the upside before this reverse split here. Usually that's what we see as folks start getting involved because they think it's going to be better for them after the split, or the reverse split for that matter. I don't think that that's going to necessarily do anything, folks. I've seen it happen time and time before, and the split is the split. I think you'll see more of a push to the upside after the split than necessarily before the split. So I think you can take advantage and wait if you haven't been involved in Amazon as of right now. Bonds looking like they're finding a little bit of a bottom after testing that 160 handle. We said during these market commentaries, folks, it is way overdone in the 160s. Yes, there is some turmoil going on. Probably not going to raise rates at the pace that they were going to. That's what I've been saying the entire time. Now with some of this turmoil, we've heard a lot of the other Fed governors not be as hawkish on interest rates, and rather than saying a 50 basis point move, they're talking about 25 basis point moves here. So right back to the point of control where time and volume has been spent for the bonds. Yeah, it doesn't look like they're going to go very far. I think that, yeah, it looks like they're finding a bottom with that chart pattern there, but at the end of the day, it's right at the point of control. Now, gold futures, after this move yesterday, it just seems like it's a sector rotation within some of these type of holders of value, if you will, which is what gold is considered. Yesterday, it was selling off. Equities making a move to the upside, but one of the things that I was looking at is gold selling off, Bitcoin making that rally. I was expecting those two to kind of move in tandem there. Not really seeing that. We're seeing the levers and pulleys push and pull on those. Are they inversely correlated? No, I think it's just happening due with the sector rotations we're seeing here that makes it look a little wanky. VIX starting to make a move to the upside after yesterday's big reversal. We saw Dow Jones Industrial Average up quite nicely yesterday, making a turnaround here down over 300 points. I've talked about this again, time and time. We are in a negative, I should say negative flow here. It is bearish. Risk is still to the downside, despite the fact that we are seeing those 500-700 point swings to the upside. The next day, we're seeing the bears come in and take control. So like I said, I would say risk is to the downside here continuously as we are seeing these levers. We're seeing the back and forth here, but we're not breaking out of this range is really what's happening. Yeah, yesterday, most folks would say this is a great bottoming pattern here. Nice big down day. Battle out with the bulls and the bears. Looks like the bears relented. Bulls took control. Well, again, we got another bearish half back day. We're going to continue to see this type of sector rotation. Take advantage of it. I would sell the rips, buy the dips in the sense of, since we have this huge volatility, sell the rips, meaning do covered calls on the rallies, and then on the sell-offs, the big sell-off days, that's where you need to start thinking, all right, well, volatility is extremely high here. I want to add things to my portfolio rather than just put something in the market. Let's sell some puts in there. All right. And I talk about how to accomplish that in your portfolios in the webinars I do on Wednesdays. Now we're doing cracking the code to trading options. Please check that out. Subscribe. Make sure you hit that bell right next to it so you get all of the unannounced videos as well. Today's going to be, like I said, cracking the code. We're going to be starting to move past some of these early entry level type of strategies into some more sophisticated ones that you folks that have never traded options will actually be able to get a hold of and understand quite easily. So please check that out. Smash the like button, smash the subscribe with the bell. And you know what? Comment. I will circle back around for you folks. That's about it for today. Let me make sure. Oh, I didn't talk about I got a little ahead of myself. Even the S&Ps, all these charts look the same, right? We've been talking about the equities, and we might see the Dow have more of a downside on some days where the NASDAQ really just isn't selling off. And then the next day it flips where we got buying pressure in the Dow and selling pressure in the NASDAQ. And that is all about the sector rotation as folks are trying to figure out what they need to cover in their portfolio and what they need to add due to the valuations on this pullback here. I don't think that we're going to see a massive like 50% cutback. We've had this nice correction, tested value area lows, points of control are slightly higher than that. So that's where we feel that the value is. And should we be at that value right now? Think about the geopolitical environments and everything else, maybe just a little bit lower than that valuation with all the uncertainty going on. And that's what's really kind of shaping up here in the markets. All right. Hitting those lower points of control where we had previously been buying and selling, that paradigm shifted a little bit higher throughout the pandemic. And now we're revisiting some of those pre-pandemic levels. All right, so not really too surprising. I wouldn't say we'll be in the bearish move for the entire year. I think that we're going to see a bearish pattern here for the next couple of months, really gyrating back and forth, and then probably into the summer start to see some relenting in the selling, and we'll start seeing a move back to the upside. But that's probably going to be closer to April, May, maybe even June, depending on how everything shapes up geopolitically. All right, so have a good one. See you this afternoon. And if you can't take that, take it easy.